In 1998, Chip Wilson sought yoga as a way to change fashion. Lululemon Athletica's vision, aside from being the best-selling sportswear apparel, was to be a place where people could get gear to sweat in and a community hub where people could learn and discuss the physical aspects of healthy living, mindfulness to clear the stress, and living a life of possibility. What's good, you guys? This is Market Thrive, and today, we're gonna be talking about the company Lululemon and why you should buy their stocks. Before we start the video, I would just like you to do me a favor by just hitting that subscribe button and the bell notification down below to keep you updated on this channel. So without further ado, let's hop into it. Before founding Lululemon, Chip worked for 20 years in the sports sectors, including surfing, skiing, and skating, before developing a love for yoga and identifying a market need. Wilson created pop-up stores at yoga studios and continues to use brand ambassadors to spread the word about the company through word-of-mouth marketing. Originally a design studio by day and a yoga studio at night, Lululemon's first physical location opened its doors on West 4th Avenue in Vancouver in November 2000. The company's $98 lines started to sell when athleisure expanded and it became normal to shop and work in yoga pants. Despite the premium costs, the collections have now garnered a devoted following. Lululemon found itself at the center of the athleisure trend, giving them a first-mover advantage as one of the few companies to concentrate on such a niche product strategy, despite the fact that the company dislikes the term athleisure, primarily because the clothes they make are engineered to be high-performing sportswear for yoga, running, and other fitness activities. Their products are engineered to be the best on the market as they continue to provide stylish and practical clothes, now for both men and women, and within such a specific niche. This is a jab at Nike and Adidas' long-standing shrink-it and pink-it strategy in women's apparel. Despite the fact that demand and supply are among the first concepts you learn about in economics, Lululemon prefers to tread a fine line by using a scarcity model that forces their products to sell out since demand is always greater than availability. While this deters people from purchasing the newest model before it ultimately sells out, it also generates an allure and a sense of exclusivity, which has a negative influence on revenues that could be greater. The company is renowned for rarely giving sales, which are usually offered when we make too much money, and their supply and demand projections were incorrect. The corporation has put more emphasis on research and development as it has grown, notably in areas related to how the human body functions and what it wants. In 2013, the company established a lab dubbed White Space, where experts study both how people feel and how their bodies move during physical activity. Some workout enthusiasts enjoy feeling sweaty on their bodies, while others detest it. This aids in providing options for everyone by using different levels of moisture wicking in the fabric. There is no denying Lululemon's success, which may come as a surprise after hearing some of Chip Wilson's well-known statements that have infuriated customers. This includes the origin of the name Lululemon, which Wilson claims he chose primarily because Japanese speakers couldn't pronounce the L sound, making the brand seem more distinctly American. Wilson even quipped in a 2004 interview that it would be entertaining to hear Japanese speakers attempt to pronounce the name. The actual reason the industry doesn't like athleisure, according to Wilson, is because it encourages women to smoke and consume Diet Coke while donning an unattractive pink velour jumpsuit in a mall in New Jersey. Wilson has also made an effort to turn off part of his intended audience by implying that, quite plainly, some women's bodies are simply not suitable for it. Last but not least, the company did little to apologize for the see-through sheer pants scandal that resulted in a significant recall. This hasn't stopped Wilson from selling nearly 14% of his share for an $844 million call. The company went public in 2007, and even though the share price dropped to almost $2 after the IPO and the global financial crisis, it now trades at almost $300 per share as the Lululemon aficionados continue to pay almost $100 per pair, which could cause its Wall Street and High Street stock to rise even higher. So why should people buy and continue to hold onto Lululemon stocks? A higher income clientele of Lululemon appears to be mostly unaffected by inflationary pressures. However, on account of concerns about a decrease in demand, other high-end shops like Nordstrom and Macy's reduced their expectation for this quarter. On the other side, Lululemon has increased its guidance for 2 straight quarters. On the earnings call on Thursday, management reported a more than 30% rise in store traffic and more than 40% increase in online traffic. With a membership program that will soon be launched, The business hopes to increase client loyalty. The end of the first quarter saw the announcement of the membership program. It features a free tier and a paid tier that costs $39 a month. Subscribers to the paid tier received invitations to in-person events as well as early access to product drops and unique goodies. The business claimed that neither product markdowns nor promotional initiatives were to blame for the increases in traffic. With 600 outlets overall, Lululemon continued to grow its brick-and-mortar presence throughout the quarter by opening 21 net new stores. Inventories increased by 85% to $1.5 billion from the same time last year. Although the company claimed that because of supply chain delays, it was under-inventorying at the time. As consumers changed their shopping habits, retailers in general have had to deal with rising inventory levels. On Thursday, Lululemon expressed confidence that the inventory level will increase sales over the holiday shopping season. The business stated that it now anticipates revenue in the range of $7.865 billion and $7.940 billion in 2022. The company's long-term outlook, which calls for tripling net revenue to $12.5 billion between 2021 and 2026, was also maintained in the report. The plan calls for growing its membership-based fitness courses, footwear, and menswear lines. When the plan was first revealed in the spring, some analysts expressed doubts about Lululemon's capacity to meet the challenging long-term objective. Lululemon highlighted some early gains made with strategy. The company introduced new shoes throughout the quarter, and its men's business expanded by 27%. Additionally, the business reported expansion in each of the nations where it presently operates outlets. Peter Lynch, a well-known investor, would have found Lululemon's growth to be appealing because he liked to find retail companies with solid growth histories that improved as they carried out their growth strategies. After just introducing its new footwear line, Lululemon's tale is undeniably becoming more intriguing. Additionally, towards the beginning of March, Lululemon unveiled its brand new Bliss Feel line of women's shoes. Although it's early, management claimed that the response from guests has above their expectations. Lululemon thinks it has a chance to stand out in this crowded industry by first targeting the women's market and launching a men's shoe in 2023. This year, Lululemon intends to introduce more women's fashions, and the next year, it will approach males with the same strategy. Since its inception with a single retail space in a Vancouver yoga studio more than 20 years ago, Lululemon has also been a huge success story. The company opened 22 new stores in the past quarter, spread across Asia Pacific, North America, and Europe, bringing the total number of stores operationally globally to 574. In the most recent quarter, its robust internet presence contributed 49% to overall sales. Overall, Lululemon is a little $6 billion company competing in the athletic apparel market, which brings in close to $200 billion annually. On the results call, Lululemon's CEO, Calvin McDonald, noted that the company is gaining from category strength as athletic apparel continues to exceed growth in overall apparel. So how long do you guys think it will last? If you like today's content, you'll sure love our previous video about how luxury brand owners trick the average person into buying their extremely expensive brands, which you can find in the description below. Feel free to jot down your thoughts in the comment section below. If you enjoyed today's video, please leave a like. And if you want to stay updated in our posts, hit that subscribe button as well. Once again, this is Market Thrive, signing off.